Alright, today we're going to be looking at Turtle Beach Corporation, ticker symbol TBCH. As always, quick company information. So the stock is trading at $12.84. There's just under 20 million shares in issue, giving a market cap then of around $255 million. They have around $12 million in cash, $52 million in debt, so the enterprise value is just under $300 million. So we're effectively dealing with what I would call a micro cap. In terms of company description and what the company actually does then, I'm sure everyone's pretty much heard of Turtle Beach, especially if you've done any console gaming. But yeah, they're basically the number one brand, especially in the US, that do like console gaming accessories, specifically headsets. I think that's where they predominantly dominate, and they have done so for over a decade. You know, even when I was like at my gaming peak, you know, back in 2010, 2009, 2008, they were massive even then. But yeah, of course, they do other accessories. So they do controllers, PDP accessories, and also flight and racing simulator hardware. But the main focus in this analysis, at least, will be on the headsets. Moving on to the financials then, specifically looking at the top line and revenue. FY25, they did around $320 million in revenue, which was down 14% year over year. The main reason for this was because they saw softness in the North American accessories market, which I think you'd expect, right? I think the last couple years, there's not been too many like big console releases. There have been some good like PC related releases and more for the hardcore audience, but in terms of like mass new casual games that have come out, it's not been that great and not that prolific the last couple years, especially in the console gaming space. That being said though, they did hold very decent gross margins, where they grew it to 37.3%, and in the Q4 25 they saw 40% in gross margins. In terms of guidance then, looking forward to FY26, they're projecting to get around $335 to $350 million in revenue, so back roughly to where they had in FY24, which I think then gives us a fantastic trade opportunity in terms of them quite substantially beating guidance and estimates here, because all they really have to do is match or slightly surpass the FY24 earnings, which, as I'll come on to with the GTA 6 release, is very, very likely and very possible. But you kind of see here, I've noted the growth drivers in H2 2026 then, specifically being the November 19th GTA 6 launch, where Sakana have said it's the highest purchase intent they've ever recorded in terms of like any entertainment upcoming release. So really, really strong demand, as I'm pretty sure everyone who's familiar with the game and with this sector definitely familiar with. Cost drivers are pretty standard, to be honest. So 63% of sales related to cost of goods, as you'd expect, right? It's a hardware company, so a lot of it is outsourced to Asia, although the China link has massively, drastically decreased, as I've kind of mentioned and flagged here. They've kind of moved a lot of resources and a lot of manufacturing to Vietnam. So the China tariff risk is much lower, but there's still obviously the overall tariff risk and Vietnam exposure. But with a hardware company, that's pretty much as expected and standard. Decent amount on sales and marketing, 16%, R&D 5%, and then they do have some interest expense as well, which we'll get onto when we look at the balance sheet. In terms of competitors then, it's again, as you'd expect, a competitive field. There are a lot of competitors with some good offerings, but again, a lot of the competitors, they're very, very competitive, and I'd say even better, to be honest, in the PC and more hardcore gaming space, rather than the casual console gamer segment. So I kind of listed Turtle Beach's advantages. You can kind of pause the screen, read it if you want. But one thing I actually haven't flagged yet is, one, they have good free cash flow. Obviously, once you factor in levered free cash flow, aka their debt, it's not as strong. But in terms of operational cash flow, it is usually quite strong. And then with that, they actually have quite an aggressive buyback program at the moment. So they've authorized $75 million worth of buybacks into the future, with around $56 million remaining, and that actually factors in about 20% of the market cap. In the recent earnings call, management actually even said that they believe there's a disconnect between the value of the company's stock price and the intrinsic value of the company. So they clearly believe they're underpriced, and very, very likely will continue to utilize the share buyback program they have to eat away at the shares outstanding, which obviously is a great thing for current stockholders. Although this is likely to be a short-term trade for us, just the fact that that's in the background always helps the stock's price, and as investors get more and more clued on into the fact of how quite strong the balance sheet is, to be honest, on top of the fact it's a positive free cash flowing company, and they have this buyback program with a pretty limited amount of shares, low market cap, you can kind of see a lot of tailwinds building up just from like the intrinsic value of the company, right, as a long-term investment. But then when you factor in the catalyst, which we'll get onto now, there's a lot of momentum building for this company and stock, I believe, going into Q3, Q4 26, and then into the first half of 2027. Moving on to the main trade thesis then. So it's actually quite niche, which in the trading world is quite useful, to be honest, because it usually gives you an edge when you can kind of see something coming that the rest of the market can't. Obviously, that then gives you informational asymmetry or an informational edge compared to the rest of the market. And that specific thing then is the proximity chat within GTA Online. So while we've seen 2 trailers for GTA 6, they've of course, as you'd expect, been focused on the single player. That's what GTA and Rockstar always do, right? They always market the single player first. And just like GTA 5, what they tend to do is put all the marketing and focus into the campaign, get that first released out into the wild, and then a month or so after, like GTA 5, they release GTA Online. This time around, they might give it a bit of a longer gap, maybe after Christmas or around Christmas time they might release GTA Online, but there will definitely be a staggered release, right? And so there's not too much information so far that we know of about GTA 6 Online. That being said, if you do a bit of digging, you'll see that Rockstar actually acquired the CFX.re, so the 5M Red M and its creator platform. So anyone who's not too familiar with GTA 5 Online, and specifically on the PC side with like the modded servers and things like that, what 5M and Red M are kind of a cultural phenomenon around COVID time, especially around 2020, 2021, 2022, was we saw a massive explosion in this thing called GTA RP or GTA role-playing. And within GTA role-playing, effectively, it was like a next-gen version of GTA 5 Online, where there was obviously the usual things you'd expect, like modded servers, right? So you had new cars, new activities, and new features. But one of the most underrated and most social features, I'd say, that really helped GTA RP be something new and different to the original and standard GTA Online was proximity chat, where basically players would have microphones and anywhere within the server, if they were close to someone, they could just speak and the other person could hear them. So kind of like in the real world, right? If you were to go outside and speak and someone was near you, they could easily hear you. And it kind of created this really immersive world within GTA Online. And yeah, for me personally, kind of like took it to like another level. So the fact that they've then acquired this exact platform that created this thing, I think is a massive indicator of what we can kind of expect in terms of new features within GTA 6, right? I believe Rockstar, the fact that they then saw, you know, the massive increase in popularity in GTA 5 RP, but a lot of the features they didn't really implement or update in the main original GTA Online, I think indicates they were saving a lot of those features for GTA 6 Online. And so I think it's very, very highly likely, or at least I'm betting on the highly probability that on the console version, we'll begin to see a lot of these RP-like features, including proximity chat. And so if this proximity voice chat is then introduced into RP-like servers, what we'll then see is a lot of console gamers, a lot of casual gamers who maybe just bought a PS5 for the game only, or they've always had a PS5 but never really had a decent headset. We'll see a lot of those kind of gamers, which to be fair is a massive segment, go out and buy, you know, kind of budget headphones, right? They're not going to, they might not want to rely on the cheap OEM products that Sony or Xbox, Microsoft provide. They might want something in like the mid-budget range, you know, $30, $50, $60 to kind of get that decent quality in terms of microphones and audio quality, but also then not spend too much. But yeah, I won't go into the abridged FS. Everyone has access to it. You can kind of see it for yourself. And then you can see the forecasts here are more Wall Street estimates and consensus. It's usually I just model that out for all my analysis. We've pretty much already talked about the competitors, but in terms of doing a sector analysis, then what we'd really want to focus on is the valuation multiples and then the growth, or at least the projected estimate growth by Wall Street. In terms of valuations, they're pretty much exactly in line, actually, quite incredibly, with the rest of the market, specifically when you exclude Microsoft and Sony. Of course, Microsoft are kind of skewing the valuation multiples because it's Microsoft. You know, incredible net profit margins and still like one of the best growth percentages out of all these companies, which is kind of incredible to think, given it's a nearly $3 trillion market cap company. But that's for another video. But if you take out these two entities, the average EV to sales for the rest of the competitors is around 1.1. Turtle Beach has 0.9, so slightly cheaper. And then their forward PE is around 13.1, which is exactly the same as the sector average. You can kind of see here, the company, I would say, based on current guidance and estimates, is pretty much completely fairly valued. And then in terms of revenue growth and earnings growth, it is a positive sector outlier in that it has much higher growth revenue than the rest of the competitors, and also much higher earnings growth projected for the next year. As always, have a SWOT analysis. Won't bore you with that. You can either pause the screen and read it for yourself. Won't bore you with a catalyst analysis again. Pretty much kind of beat it to death now, and that's mainly what I've talked about. But yeah, GTA 6 Online multiplayer is the main catalyst coming up with the release of GTA 6, and then yeah, we'll see how they do. There's definitely some room for positive asymmetry given the valuation multiples, as we've already highlighted. If they beat estimates, these valuation multiples come even further down, which makes them lower than the average of their competitors. And given the fact that it's quite a premium sector outlier in that they usually have better growth than a lot of their competitors, these valuation multiples won't make sense, especially when they go lower, which means the stock price has no option but to increase. And that is pretty much the trade thesis summarized, to be honest. In terms of technical analysis then, again, I don't like spending too much time on this and getting bogged down with technical analysis, but I do look at the more basic things and the more obvious things like support and resistance. In terms of support, even going back to over 2 years ago, we clearly do see a support for the company of around $10, indicating the downside from what today is currently just under $13 a share. Pretty minimal downside. What's that? I think about 23%, 25% potential downside, I think, to the resistance, to the support level. Whereas when you compare it to then the resistance bands I have up here, I think the first main resistance we'll see is around $17, $17.50, where was the previous high back end of last holiday season, where they were performing well. We were expecting GTA 6 to be releasing soon before it got delayed. So I think this stock can easily go up to around those prices again, right, between $17 and $18. And then if we do see the announcement then of GTA 6 online with the proximity chat, I think we can definitely go back to the previous highs of around $20 a share, which actually quite nicely is represented here with my sell price targets, conveniently working out to around the resistance level, I think, of $19.50 at the top end, where I'll get $20. And then if it doesn't happen, I still think the stock's at least worth probably about $19, $18. So there is significant upside even without an estimates beat. But yeah, if they do have the estimates beat, you can kind of see a slight uptick here in the fair value, I believe, of the stock's price. In terms of how I value the company then, if you've not watched any of my other videos, I like to take multiples on the top line, which is revenue, sales, and then also the bottom line, which is earnings, and yeah, kind of get a rough valuation of the company via that without spending too much time aimlessly doing DCF models, especially when it's a short-term trade like this. Alright, I think I've just noticed a typo here. That should be saying 13.1 or 13 rather than 18. But yeah, if you give for the FY27 EPS of $1.27, 13 price to earnings multiple, you get around $16 per share. And then if you give a sales multiple on the FY27 projected sales of 375 million with the, again, FY26 held sales multiple 0.7, you get a share price estimate of around $14 a share. And so that's what I would then call the market valuations, or pretty much what the market is kind of estimating into the future and into 2027 the stock price being. We then look at the reasonable, and effectively the reasonable is what I personally think, if I was to be prudent, the valuation multiples I would assign the company. And on their FY27 earnings, I'd give them a 15 PE ratio. The reason for that, again, if you go into sector analysis, look at their two main competitors, I believe, or at least publicly traded competitors in Corsair and Logitech. Corsair have a 13.5 PE ratio. Logitech, a slightly more premium company, have 18. I believe Turtle Beach kind of sit in between Corsair and Logitech, especially, again, if you look at the net profitability of both companies, they kind of sit in between. I think a 15 PE ratio, especially when you factor in the profitability, should keep increasing along with top line if the GTA 6 trade kind of plays out. I think a 15 PE ratio is more than fair. That then on the FY27 EPS of 1.27 gives a fair value price target around $19 a share. And then if you value the company based on its sales, I think a 1x sales multiple for a hardware manufacturing company, again, it is fair, which is substantiated with the sector analysis. Again, the peer average, if you exclude Microsoft, is around 1.1. So assigning a 1x multiple to sales, I think, is more than fair. And with the 375 million sales estimate in FY27, that gives a per share value, again, just under $19. So this figure obviously is taking the average of all of them, but focusing only then on the reasonable price estimate targets, which is where I usually like to set my sell price targets at. You get $19 a share, which then if you want to give a 40% headroom, which again I like to do with my buy price target, comes in around $13.55. And then all the GTA 6 proximity chat section here is doing is just factoring the middle case scenario we went over, which was again $12+ million in revenue and $4+ million in EBITDA, circa $3 million in net income. That then uplifts the PT price the price target based on earnings to 20.79, and then the sales, again ignore the typo here, I just realised it's 1x, as you can kind of see the one there. But yeah, based on the sales, it uplifts it from 18.89 to 19.52, given an average then of around 20.16. So not too material, a pretty much a $1.2 increase, which as you can kind of see here is around a 6% uptick as well. So nothing too crazy. While the GTA 6 proximity thesis does give you a bit of an edge, I believe, in the market, and kind of gives a more of an informational tailwind and uptick to this company in terms of branding and awareness and all those good things, especially with the stock price. Those things are always very beneficial. I think the main trade here is just the fact that I believe it is quite severely undervalued based on pretty simple valuation multiples, and again the company is very well positioned for this holiday season. But yeah, I think that's everything then I wanted to cover in the Turtle Beach analysis. As always, if you do have any questions, be sure to drop them down below in the comments. I do always get to them, and we can kind of take it from there.